Let's dive deeper into the action with the markets reporters, equities, bonds, currencies and commodities. Abigail, what are you watching?
You know, Caroline, I'm thinking a bit cross asset class because while we have this nice stock rally and the technicals for the S&P 500 are fairly constructive, it's worth noting we also have a rally for Haven bonds. Take a look at this. The 10-year yield shedding 11 basis points on the week. This is the biggest rally for bonds going back to the first week of October. So you have growthier stocks rallying, but you also have Haven bonds rallying, and that has influenced the sector composition. Putting aside the big rally that we saw just today for healthcare, the best sectors on the week, real estate and utilities, those of course are rate sensitive. They have high dividends. When yields go down, these stocks go up because the dividends look more attractive. On the flip side of this, take a look at the two of the worst sectors, or one of the worst sectors on the week, the financials and then especially the KBW Bank Index underperforming, Taylor. So it'll be interesting to see whether or not this continues, because this week it seems as though the defensive sectors are actually doing quite well.
Well, Abigail, we've talked so much about how the last decade has been the most unloved bull market really going on here. And this is interesting because according to a report from Richard Bernstein Advisors, they said that this actually isn't the case, that investors really are euphoric on the market when you also include venture capital and private equity. And so they've taken a look at an index here inside my terminal, and that is charted in white relative to the S&P 500, which is blue. And they said if you include private equity and venture capital along with publicly traded stocks that include dividends, the euphoria in the market is there. As you can see, that indicator has increased more than 11-fold since the S&P 500 started rising back in March of 2009. That is more than twice the S&P 500's total return for the period. So at least for now, we can say as long as you include some of that private equity and venture capital, euphoria is back in the markets. Mike?
Well, thanks, Taylor. I have that euphoria on my mind as well. I mean, obviously, the U.S. stock market's been grinding higher for a good 6 weeks now. But today it did enter what is officially considered overbought territory, at least according to a popular momentum indicator known as the 14-day relative strength index. Now, an RSI above that official overbought level of 70 is not necessarily a death knell for the rally. In fact, a lot of technicians think it's bullish as long as the momentum keeps going and that RSI keeps setting higher highs. In fact, in the real euphoric periods of the market in 2017, 2018, it stayed above that overbought level for extended periods, even reached as high as 87 in January of 2018. But if you look at that chart, you'll notice it's had a hard time staying above that 70 level this year. And in fact, today it went to about 73, which is the highest it's been since late April. And that was right before a dip of about 7% in the S&P 500. Of course, there's no guarantee that history will repeat itself, but Scarlett and Caroline, it wouldn't be too surprising to see the market sort of take a breather next week as it digests all this momentum that's led up to it.